Hello friends, welcome back to my channel Finance Eco India. Today we will do a deep dive into Infosys Limited, one of India's leading IT giants and a global powerhouse in digital transformation and consulting. With a market cap of over 6.5 lakh crore, Infosys continues to shape the tech industry through AI, cloud computing, and enterprise solution. Today we are breaking down their Q1 2026 financial results, analyzing key metrics, management insight, and what's this mean for investors. Let's get started. But before that, please subscribe to my channel. Infosys kicked off financial year 26 with better than expected performance, demonstrating resilience despite global macroeconomic headwinds. Here a detailed breakdown. Revenue rose 8% year-on-year to Rs 42,279 crores, surpassing estimates of 41,767 crores. Net profit grew by 9% year-on-year to Rs 6,921 crore, outperforming the projected 6,719 crore. Earning per share EPS increased to 16.898 rupees, reflecting steady profitability. Operating margin stable at 20.8% with guided range. So let's see segment-wise performance. So financial services, it increased by 5.6% year-on-year. Steady growth despite banking sector cautious. Manufacturing, it increases by 12.2% year-on-year. Stronger demand for digital transformation. Retail and life science is flat, weak discretionary spending offset by healthcare tech demand. Communication sector, it declined by 1.3% year-on-year. Telecom client delayed non-essential projects. So key takeaway is while most segments grew, retail stagnation and telecom softness indicate selective client spending. What's behind these numbers? Let's examine the three biggest drivers. Large deal momentum, $3.8 billion in new deals, 55% net new. Includes a $1.5 billion AI transformation contract with a European bank. Deal pipeline remains strong at $9.2 billion. Strategic acquisition, MRE Consulting, Germany and the Missing Link Australia contributed 40% BPS to revenue growth, strengthened Infosys' local presence in Europe and APAC. Macroeconomic factors, US and European client optimizing cost, higher demand for automation and AI. Weakness in retail and telecom offset by manufacturing and BFSI strength. Attrition rose to 14.4% from 13.2% in Q4, posting a margin challenge. So bottom line is Infosys is outpacing peers due to its diversified portfolio and AI leadership, but wage hike could pressure margins. Leadership struck a confident yet cautious tone. Here's what stood out. CEO Salil Parikh's key message. Our Topaz AI suite is now embedded in 75% of new deals with 200 plus Gen AI project live. We see strong traction in Europe where revenue grew 6.1% sequentially while return remains soft. Cloud modernization deals are picking up in H2. CFO Jayesh Sanghkari on financials. Margin held steady at 20.8% due to pyramid optimization and automation. We are maintaining financial year 26 revenue guidance at 1 to 3% constant currency growth with margins at 20 to 22%. Project Maximus cost efficiency program will drive $300 million plus saving this year. So the management takeaway is doubling down on AI in Europe while keeping costs tight. Now let's see how did market and expert responded. Stock performance, share fell 0.8% post earning on profit booking but are up 12% YTD. Outperformed Nifty IT by 5% this quarter. So analyst ratings are Morgan Stanley gives the overweight, best in class execution, AI deal justify premium. Nomura gives the buy rating, guidance hike likely if manufacturing growth sustains. Goldman Sachs give the neutral rating, attrition and wage hike could limit upside near terms. So the key takeaway is bull praise tailwinds and AI, while bears watch margin pressure. To sum up, Infosys delivered solid Q1 results driven by large deals, acquisition, and AI growth. Even as attrition and macro risk lingers, what's your take? Will Infosys sustain its momentum? Drop your thoughts below. Don't forget to like, subscribe, and hit the bell icon for more expert financial breakdowns. Thanks for watching. See you in next earning breakdown. Thank you and Jai Hind.